Ultimately, we know deeply that the other side of every fear is a freedom. Marilyn Ferguson. Whatever your fears are, that you can't do this, that you're afraid of putting something on the line, start slowly. Practice trade. Then you get into fractional trading. We want you to stay with us as long as it takes. We're here every single day the market's open. We only ask 10 to 15 minutes. Use those daily market worksheets, weekly market worksheets, and trade worksheets every time you have the opportunity, particularly the trade worksheets when you're doing trades. That's where you learn the nuances. Win, lose, or draw. Very, very important. Let's jump into these charts. Stocks up for the day. Bonds down. Bitcoin down. Gold up. Let's first, as we always do, jump into the S&P 500. We always start with the biggest chart, our weekly chart, and work our way down. What do we see that is of import here? We can see that the price percent oscillator is still negative. Derivative oscillator is losing downward momentum. As we look at where the previous highs were, we see back on Friday the 19th, the week ending then. What was the high during that week? 398.12. Where are we so far this week? 398. That is the high. So we're touching up toward that. Haven't passed it yet. Price percent oscillator still flat, maybe going down a little bit still. And we'll continue to watch. We have a green candle that is forming. We had that weekly vertical crossover back on the week ending Friday the 26th of February. Nice down week that next week, following in line to that. Now we're going into the fourth week of up movement, but again, not rising higher yet than that second week of up movement. So we'll continue to watch. Look at this 2-day chart. Not enough energy to cross over, trying to move up. Of course, typically that 2-day chart is going to cross before the weekly and drag the weekly over. So we'll see if this resistance level somewhere, around the 398, well, just a little above that, 399, 400 mark is going to be surpassed. And if it is, what's it going to do? Or is it just going to die up there and then start moving down? Don't know. We'll wait. We will see. Oh, by the way, we recorded chapter 6 in our book. We're doing our new electronic book now. If you don't have our book, I urge you to go ahead and buy the print edition that we have now. We'll send it to you, autographed copy. As soon as the new book comes out, it's the same book, just an updated version. We will send that to you for free, the electronic version. It's what we call a high E book. It's hyperlinked electronic book with videos and graphics and all sorts of good stuff. I'm very happy. Every week I'm putting out a chapter. We're up to chapter 6. We have several more to go. We'll release those each and every week as we move forward. So please, nonetheless, order the book and support us if you like our work. What do we see on the half-day chart up in the morning? About the same, topping in the afternoon. Price percent oscillator positive, derivative oscillator positive. That's where we are on the S&P. Just waiting to see how it's going to sort itself out. Is it going to go higher or die? We still have that overhang of the price percent oscillator with that downward pressure. What do we see on the Qs? This is the Nasdaq 100. 3 weeks of down movement. That strong down movement ended the week ending the 12th of March. Going into this week, we've had 2 prior, a spinning top, almost a doji last week. This week, a green spinning top, open box. So we'll see. As far as the most previous high that we had, that was back on the week ending when the sideways slide started on the 19th of March. That high was 324.20. Of course, we've not touched that yet, so we see the price percent oscillator still heading down, derivative oscillator losing downward momentum. 2-day chart. We can see that the price percent oscillator is negative but heading up. Derivative oscillator just barely positive. What have we ended? Well, we previously had 4 days of red spinning tops. This is a green open box spinning top, just trying to push above the 2-day trend line. So that's where it ended. So we'll continue to watch and see again how the Q sorts itself out. We can see that crossover that occurred in the morning on the half-day chart pushing through the 2-day, blowing through it, and then it got about the same topping at the end of the day. So again, waiting, watching, seeing what's going to happen to these stocks. Are they just going to slide sideways and die? Or are they just digesting those previous gains, sort of letting it soak in and getting revved up to head up again? We'll wait and see. The market is not telling us at this point. So guess what we do? We wait. Now, let's move on to 20-year government bonds. What do we see there? Down for the day, 0.49%. Now, again, the price percent oscillator still heading down. It's lost some of that momentum over the last 2 weeks. Derivative oscillator losing downward momentum. We have a red down candle that is forming. We look at the 2-day chart. We were wondering, if indeed would this cross over at the end of the day on Wednesday. Didn't happen. If there continues to be downward push on bonds, that might happen when the next 2-day candle closes when? On Friday afternoon. So again, go ahead, mark your calendar, put it on your daily market worksheet to watch for what might be happening on Friday. Not happening yet. Remember, we had that 2-day crossover going up. A recross is when the 2-day pulls back like it is now and then moves back in the direction of the current weekly trend. So that has not happened yet. If that does happen and bonds start to die again, then of course that could be a jumping in point for another. We can look back on these charts and see at least 2 successful 2-day recrosses in the recent past. So we'll be watching to see if that offers itself up again. And look at what's happening, sort of laminated here for a few days as far as the half-day trend line goes. Well, the half-day, rather, price percent oscillator, derivative oscillator negative, losing a little bit of downward momentum throughout the day. So we'll continue to watch, wait, and see. That's where we are. Go ahead and mark that in your notes. This is how you use the daily market worksheets. And of course, once a week on Friday. This week, since the markets are closed, oh yeah, I forgot. Markets are closed Friday. So as far as a 2-day candle ending on Friday, not gonna be happening. Now, what should you do with that information? Probably the best thing you can do is simply wait over until Monday, Tuesday, see what's happening next week. Now, if the market really dies on Thursday, then what do you look to do? Well, you look to practice. And you might say, if the market's closing early and it's crossing over on that 2-day chart, what should I do? You could do a practice trade and see what you learn from that. Good, bad, and ugly. And again, that's what learning the nuances is all about here. Let's go on to gold. What do we see happening with gold? Gold is up for the day 1.52%. We have a red down candle that's forming. Price percent oscillator still going down. Derivative oscillator losing downward momentum for the last several weeks. 2-day chart, not enough energy. Not enough energy to cross over. Going down. What would we call that? We would call that a 2-day recross. If it had occurred, it did not. So again, the next opportunity is probably going to be this next week. Why? Since the markets are closed on Friday. Now again, if gold has a big down day on Thursday, you might look at considering jumping into a practice trade to see what there is to learn on it, but those aren't where our rules stand. But again, always worth practicing. If you're not practicing, you're not learning. Now, and it doesn't cost you anything to do practice trades. It costs you a little bit to do a fractional trade. I'm going to put the fractional trade training at the end of today's video for those of you who don't know what that's about. That's just putting a little small amount of real money, I'm talking like $50, $100, into a fractional share just to have some skin in the game and learn from it. It helps you learn bid and ask, how to enter trades, how to exit trades, how to really set up for real profit and loss bands. I'm going to put that training in too. Profit and loss bands and fractional trading. I want you to practice those things. You need that knowledge. What do we see on gold on the half-day chart? Up in the morning, further up in the afternoon, but that half-day chart still negative. Now, lastly, we go to Bitcoin, down for the day, 0.45%. And of course, we look at the weekly chart. Bitcoin still down on that weekly chart. Derivative oscillator gaining downward momentum. Price percent oscillator pulling away from the red signal line, not hitting a higher high since it hit back up at $59,000 plus on the week ending. This is during that week, the week ending the 19th of March. So we'll continue to watch their 2-day chart. Price percent oscillator pretty much flat. Had a big green candle popping up. And again, where did it get up to? Up to about 58,400. So again, we still had a higher high previously. So we'll watch and see. Derivative oscillator still gaining downward momentum. Like I said, price percent oscillator negative. And we can see where things have sort of topped out over the last couple of days. And that, again, we can see on those Heikin-Ashi candlesticks a slowdown in the up movement. Same with the price percent oscillator. Derivative oscillator still gaining upward momentum because it's oscillating upward based upon that blowing up movement that perpetuates itself a little longer in the leading indicator, which is a triple smooth version of the relative strength index. That's what the derivative oscillator is. That's where we are, folks, as we end the day. If you don't have the book, please buy it. You will get a copy of the digital Hyper E book, the hyperlinked electronic book, when we finish it. But in the meantime, don't put off your learning, your trading, your training. That's by buying the book. And you help support us here at the channel for all the free content we provide to you each and every day. Hope you're a subscriber at the channel because you're not getting the free training that comes in the show notes every day. Plus, the PDFs of the daily market worksheet, weekly market worksheet, and trade worksheet, all those available for free to subscribers. God bless. All the best from the whole team at Charting Wealth World Headquarters.